You ever look at a stock chart and it looks like a bunch of random scribbles, right? Just jagged lines going up and down. Well, what if I told you that's not noise? It's a language. And today, we're going to learn how to read it. We're going to turn that chaos into a story by looking at the clues the market leaves behind with every single trade.
All right, so let's get into it. The smart money game. It's really helpful to think of the market exactly like that, a game. And in this game, you've got two kinds of players. On one side, you have us, the retail traders, the little guys. And on the other side, you've got the smart money. These are the big players, the massive institutions. And believe me, they aren't playing by the same rules, and they definitely don't have the same impact on the price.
Yeah, look at that. That number is pretty intense, right? 90% of retail traders lose money. This isn't just some random statistic. It points to a huge factor in the market, the influence of that smart money we just talked about. This isn't about being unlucky. It's about knowing the game you're in and who you're playing against. So the big question is, right? If the game feels stacked against you, what do you do? How can you possibly start to understand what's really going on? How do you get a peek into what those big professional players are up to?
Well, the answer is actually right there in front of you on every single chart. It comes down to two things, two massive clues that every transaction leaves behind. First, you've got price, and second, you've got volume. That's it, price and volume. These two things are the absolute building blocks for figuring out the market story.
Okay, let's start decoding. First up is price. And the best way to see what price is doing is by using what are called Japanese candlesticks. Seriously, each one of these little things is like a miniature snapshot of the market's mood. So let's break one of these down. It's actually super simple. The main kind of fat part of the candle, that's the body. It tells you where the price opened and where it closed for that period. If it closed higher, it's usually green or white, which means the bulls are winning. If it closed lower, it's red or black. The bears are in charge. And those little thin lines sticking out, those are the shadows or wicks, and they just show you the absolute highest and lowest prices the market hit. Now, one candle on its own, it's like a single word. Interesting, but it doesn't tell you much. But when you start stringing them together, one after another, that's when you get sentences. You start to see patterns. And these patterns, man, they reveal so much about the tug-of-war happening between the buyers and the sellers. Check this out. This is a perfect example. On the left, you've got what's called 3 white soldiers. See that? 3 big, strong green candles in a row. It's like a story screaming at you that the buyers are in complete control. And on the right, the exact opposite. 3 black crows. It's just relentless selling, one candle after another. You can see the momentum just by looking at the picture. Okay, but here's the thing. Price is only telling you what happened. It's just half the story. To really get what's going on, you need to understand the force behind those moves. And that brings us to our second absolutely crucial clue, volume. I mean it. Price is only half the story. Think about it this way. Price shows you the outcome of a battle. But what if you could see how many soldiers actually showed up to fight? That's volume. It's the participation. It's the effort. It's the conviction behind the move. And lucky for us, there's a name for the technique that combines these two things. It's called volume spread analysis, or VSA for short. The key thing to get here is that we're not looking at price and then looking at volume separately. No. The magic is in their relationship. We're analyzing how they interact to figure out what's really going on with supply and demand. And hey, this isn't some brand new crazy idea. This stuff has been around for over 100 years. It all started way back with Charles Dow. Yep, that Dow, who basically said, hey, volume should back up what the price is doing. Then this genius named Richard Wyckoff came along and built a whole system around it to track smart money. And more recently, a guy named Tom Williams polished it all up into what we now call VSA. All right, so we've got our price clues and our volume clues. Now for the fun part. This is where we put them together and really start connecting the dots to find the real story. So the first thing we look for is harmony. It's simple logic, right? If you see a big, long candle, a huge price move, you'd expect to see a ton of volume behind it. Lots of effort for a big result. And if you see a tiny little candle, you'd expect low volume. Not much effort, not much result. When those two match up, we call it confirmation. It means the story the chart is telling us, well, it makes sense. But here's where it gets really interesting. The biggest clues, the most powerful signals, happen when the effort and the result don't match, when they're out of sync. This is what we call an anomaly. And an anomaly is like a giant flashing sign telling you that something is up, that the balance between buyers and sellers might be about to change, big time. Okay, look at this chart. This is a classic example called a test. You see how the price moves down on that candle? It looks like it wants to go lower. But then, look down at the volume bar right underneath it. It's tiny. That's the anomaly we were just talking about. The price went down, but there was almost no effort, no selling pressure behind it. What's the story here? It's telling us that the sellers are tired, they're exhausted. And that is a huge signal that the buyers might be getting ready to take over.
All right, we've gone over the core ideas. Now let's pull it all together into a simple toolkit you can start using right away to turn all that chart noise into an actual story.
So here are a few classic patterns to keep an eye out for. You've got the hammer. When you see this after prices have been falling, it can be a sign that buyers are stepping back in. The shooting star is its evil twin. You see it after a rise, and it hints that sellers are taking over. And then you have engulfing patterns. This is when one candle completely swallows the one before it. That's a really powerful signal that control has just changed hands, like immediately. So let's just nail down the key takeaways. 1. Candlesticks show you the market's psychology. 2. Volume shows you the effort behind the price moves. 3. The relationship between them, especially when they don't agree, that's where the real clues are. And remember, the goal here isn't about predicting the future. No crystal balls. It's about interpreting what's happening right now with way more clarity. So from now on, when you pull up a chart, you're not just looking at squiggly lines anymore. You're not guessing. You now have the basic tools to start understanding the story that the market is telling you minute by minute. So the question is, the next time you look, what are you going to see? Random noise? Or are you going to see the hidden story?